All right, everyone. The dead cat bounce kind of ran into a wall of sellers today, but it's hard to even act like that. Anything of importance happened today. The New York Stock Exchange pulled back 0.24%. Oh my gosh, I can't even type correctly. The S&P 500 pulled back 0.26%. The Dow Jones Industrial Average pulled back 0.19%. The Nasdaq pulled back 0.64%, leading to the downside with the Russell 2000, which was the ultimate loser today, 0.83%. But overall, as you can see, we're still pretty much just range bound now, even in between an even shallower level of resistance and support in most of these indexes. So right now, really, till we break out above these recent highs or these recent lows, it'd be pretty dumb to try to even pretend that you know which way the market's going to go. But I got to be honest with you, the level of leadership in defensive industries, the lack of overall long signals, even though we did get 4 yesterday. There is 1 this evening, which is amazing, but once again, it's in a more of the one few industry. I mean, the home builders continue. Look at this. Look at home builders. I mean, if you just look at the home builders and the home construction index, you'd think that this market was just rip roaring higher. However, outside of this and every single defensive industry group, things just don't look that healthy. And with the overall market, most of our oscillators are still moving lower, trying to get towards oversold levels, but they are nowhere near oversold levels, so there easily could be a lot more selling left. And don't forget, the crowd is complacent. I keep reading some articles every once in a while that shows me that the crowd is fearful and everything. Man, if that's the case, why isn't it reflected in the VIX? And maybe this is the new norm. I mean, it's always possible this is the new norm, but even if this is the new norm, I mean, look at the October lows. Once again, I want to remind everybody, we hit 30, 31 in this index. So until we hit there, until we inverse these numbers, juxtapose these numbers, whatever you want to call it, I'm just in the camp that, we probably haven't seen the lows. No fear, no bottom. And that's just the bottom line. But there was really no fear today, but we do have some sell signals. HDP, I've already been knocked out of everything, but finally, because of its lack of an intraday reversal today, it's giving a 50% sell signal. Could be 100%, but the original idea of the original sell stop, final sell stop, was 25.49. So until it closes below 25.49, it's not going to be a full sell on an end-of-day basis. However, I am all out of HDP already. RAD also is closing below the 20-day moving average on heavier volume before producing any gains. So this is a 50% sell signal. What I'm going to do is continue to operate how I have been. So this becomes a 50% sell signal, move below 879. I'll be taking out a half of the position that I remain in because I believe I got knocked out of some back here. And then, of course, my final sell stop remains all the way back here, which was the final sell stop. Initial final sell stop following the long signal. But RAD is a 50%er, and HPY, I wish I was in HPY, HDP is a 50% sell signal. We have some full sell signals today. ICCC has finally fully failed. Remember how upset I was for not getting long that initial day and missing out on an immediately 20% gain in one day? Well, now if I was still long from that signal, I would be down 7%. So kind of got lucky there now in hindsight, but it would have gone through my final sell stop anyway. It would have been at the low here, 902, so I would have been knocked out of all of it on this day, the 14th. Probably would have gotten out at 850, so would have suffered a small loss anyway. So it turns out in hindsight, it's a good thing that I did not get filled on this trade. However, if this trade would have started out this way and kept going up and eventually touched, let's say, 20, possibly, always could have done that. I'd obviously have been way more upset about not having the trade. So in hindsight, I still would have rather have been long and have been knocked out on an end-of-day basis with a 7% loss than not gotten a position at all, because a 7% loss compared to what I expected could possibly be another measured move of at least 87%. I'll take that reward to risk ratio any day as long as the market's strong. That signal came before the market got too weak. Remember, the Nasdaq was still, it was looking shaky, but it was still overall trending higher. Where now we have a sideways trend. And also WWAV, hard close below the 50-day moving average on heavy volume. And I know from our original long position we still have gains, but that doesn't matter. This closed below the 50-day moving average is on big enough volume with a red enough bop, and it's been red the whole way ever since an earnings miss. So this is bad action following earnings. You want to see this immediately hold. You don't even want to see us come back into the intraday ranges of these two reversal days. So the fact that we did that following an earnings miss is a no-go. So WWAV is a full sell, and then GSB is closing below the 20-day moving average on above average volume and below the lows of all this base 332. That was my personal final sell stop level. I know that I said if you wanted to, you could do 338 and 318, but in the video lesson I said to everybody 332 will probably be my final sell stop level, and that's exactly what it was. Had half of it below 338, and then after I got shaken out of half my position, I put the final sell stop below 332, and now we're completely gone to GSB. But that's it for the sells. Now, I flagged absolutely nothing this evening. Not one stock gets flagged, but we actually do have a new long position. Now, my momentum oscillators are not confirming the move. They're kind of turning down. This one's kind of trending down. This one's trending down, and RSI is trending down. So once again, don't expect it to be, with this kind of chart pattern, something that has to work. If we're in an extremely strong uptrend where the markets are hitting new highs on well above average volume and there are already stocks breaking out and producing our gains. Now remember, our recent long signals, they're all working, like BYD. BYD continues to work. CTXS continues to work. FR continues to work, even though look at it, that looks a little shaky now. And our new long signals from yesterday, while they didn't fail, they're not moving up a lot. They're still holding in, like BCO, LMAT actually moved up a little bit. MD's holding in, even has increased BOP. And then DERM still has MaxStream BOP pulled back on lower volume. So they're holding on. So that gives me, if any of those would have failed hard, I would not be doing what I'm doing. This gives me the confidence to go ahead and once again increase my position size per trade. So in the first round, the BYD, CTX, and FR, those were 1%. BCO, LMAT, MD, DE, or not DERM, strike that, but MD, LMAT, BCO, KFRC, which I'm already long at 1%, those became 1.5%. So today, this evening, BLDR will be 2%. So 2% of my account capital in BLDR. I'm okay with doing that because to know that I'm wrong on the first half of my position, I only risk 4%. A move below 14.10, I'll be out of half the position. And then a move below 13.81, I'll be out of all of the position. And let's say you get a really bad fill on your final half of the position, it's only an 8% loss. 4% overall on the position you'll be losing on the account capital that we put at risk. So overall, BLDR, I love this technical pattern. It's not perfect. Obviously, it's good enough because the 20, 10, and 5-day moving average are all kissing price. That's a requirement for my better long positions that I can start increasing size in. But overall, this particular pattern right here is not symmetrical to this past pattern and even this pattern, which is wide and loose. So this is a tighter pattern. It's a base, really it's a base on base on base pattern, but the length of this little pattern here isn't really long enough to be extremely cocky and confident and want to go 5% on. Plus the market is what it is. Like I said, strong uptrend, hitting new highs on heavier volume, with the home builders doing so good. This is obviously a home improvement store. Yes, 5%, but in this market environment, just 2%. But I will admit, this is a great chart. It's one of the best looking technical patterns I've seen in a long time. They don't normally work now, but once again, we're not normally receiving these patterns with everything lined up. And once again, we have a beautiful technical pattern, but our market's not lined up. So 2% of the account capital, and I would not be surprised if this fails.